Welcome to Explain the Charts. Today, we're going over USDCHF, and the news and chart data is showing some very interesting things. Let's start by looking at the recent news and events surrounding this currency pair. The current price is right around 0.8471, and there's been a noticeable downward trend in the past 24 hours. One of the key factors impacting the USDCHF is the recent statement by the Federal Reserve, hinting at a potential policy change in September. The Fed's signals on interest rates are always closely watched by traders, as they can significantly influence the value of the US dollar. This news has contributed to a somewhat bearish sentiment around USDCHF, as traders anticipate a potential shift in the Fed's monetary policy. But before we jump into the charts, let's consider the Swiss franc's unique position as a safe haven asset. The Swiss franc is often seen as a safe haven currency due to Switzerland's stable economy, political neutrality, and robust financial system. In times of market uncertainty, investors often flock to safe haven currencies like the Swiss franc, which can lead to increased demand and a stronger CHF. So, how do these news events translate into the chart data? Let's take a look. We'll start with the daily chart. The daily chart shows a clear downtrend over the last couple of weeks, which aligns with the bearish sentiment we discussed earlier. The price has broken below key support levels, indicating a strong selling pressure. Let's zoom in on the past month and see if we can spot any significant patterns or trends. The daily chart shows a clear downtrend over the last couple of weeks, which aligns with the bearish sentiment we discussed earlier. The price has broken below key support levels, indicating a strong selling pressure. The recent drop in price coincides with the news about the Fed's potential policy shift, highlighting a possible connection between current events and price action. Now, let's switch over to the 1-hour chart to get a closer look at the recent price action. The 1-hour chart reveals a more volatile picture compared to the daily time frame. We see a series of lower highs and lower lows, confirming the downtrend we've been discussing. There's also a clear resistance level near 0.8550. Let's narrow down our focus to the past 3 days. If you look at this range, we see the price consistently testing the 0.8550 resistance level but failing to break through, suggesting a potential bearish signal. The price has been consolidating below 0.8500. However, there's a slight bounce off the 0.8450 level. We can see a slight bounce off this level as well, indicating a potential short-term support zone. These short-term fluctuations are likely influenced by the news flow and the overall market sentiment. However, the overall direction remains bearish. Let's shift our focus to the 15-minute chart to get a better understanding of the current market dynamics. The 15-minute chart provides a granular view of the price action, revealing the fluctuations in demand and supply. We can see some quick rallies and sharp drops within this time frame. The price is currently hovering around 0.8470, slightly below the short-term support level of 0.8475. The price has broken down below the 0.8475 level, hinting at a potential short-term bearish signal. This rapid price movement is likely fueled by short-term trading strategies and traders reacting to news and events. It's important to note that short-term price fluctuations can be highly unpredictable and can easily reverse. Based on our analysis of the USDCHF news and chart data, here's a summary of the key price levels to watch. On the daily chart, there's a strong support level near 0.8450. If the price breaks below this level, it could signal a continuation of the downtrend. The 0.8550 level on the 1-hour chart acts as a major resistance zone. If the price breaks above this level, it could indicate a potential shift in the bearish sentiment. On the 15-minute chart, the 0.8475 level acts as a short-term support level. If the price breaks below this level, it could suggest a continuation of the downward movement. However, the price has bounced back from this level in the past few hours. In terms of predictions, based on the current news flow and chart data, USDCHF is likely to remain bearish in the short term. The potential policy change by the Fed in September and the overall risk-off sentiment are contributing to this bearish outlook. However, it's worth noting that the Swiss franc safe haven status could provide some support if market conditions become more uncertain. Ultimately, the USDCHF's direction will depend on a number of factors, including the Fed's actions, global economic developments, and investor sentiment. To confirm the bearish outlook, we need to see a clear break below the 0.8450 support level on the daily chart. On the other hand, a break above the 0.8550 resistance level on the 1-hour chart would invalidate the bearish outlook. Keep an eye on these key price levels and the overall market sentiment to make informed trading decisions. Also, watch for any major news releases, particularly those related to the Federal Reserve or the Swiss economy, as they can significantly impact the USDCHF's price action.